Hey there, everybody. Thank you for joining us on another awesome AMA we have today for you. My name is Shane. I run the events over at 10 Capital Network. And we have Alex Goodman from Clockwork here to give you a presentation on family offices and tech demonstrations. So with that, I'm going to bring him up here to get started. And before he actually jumps in, I want to remind everybody in the audience to go ahead and put your questions in the chat box as we go. And don't forget to answer the poll at the end of each of our pitches today. With that, I'm going to let Alex take it away. Why don't you tell us a little bit about yourself?
Hey, Shane, thanks for having me. It's a pleasure to join 10 Capital Network today. Let's zoom in a little bit. I'm pleased to present my company, what we do. We work with family offices and a range of private investor profiles. We've developed a proprietary software solution for tracking complex private investment portfolios and the content that lives inside those. And my background, I'm a finance practitioner for years. I spent the beginning part of my firm in the large accounting world. I have a master's degree, and I've been working in private investments ground level for the last probably eight or so years. This project that we've built has, taken the last several of those 8 years. But I'm a finance generalist, an investor, a multi-time entrepreneur, and as I said, I'm pleased to be here today to talk more about what we do. So with that, I'll dive into a very quick presentation, and as Shane mentioned, I'll flip through a quick demo. And as mentioned, please feel free to drop questions. This is, more interesting the more interactive it is, and I'm very much available to go deeper with anyone as they'd like in a follow-up. We run demos routinely every day, all the time. So don't hesitate to reach out if what we're talking about strikes a chord. So Clockwork, the way that we label ourselves, we coined this phrase, the digital investment office for private markets. That is intentionally broad and general. We don't see private markets or private investing as a one-size-fits-all thing, and therefore a solution should not be that way either. And so we've taken a very general, flexible approach to build software to support a whole host of needs within the private investing landscape. That said, before I dive into the tech itself, I wanted to just highlight a couple trends that we see in the market that are driving continued uptick in the amount of private investment that's happening. There are some big themes that might sound familiar to some of you. And so I'd like to preface the why we're building our platform with a little bit of the macro picture. So generally speaking, there are a handful of capital inflows that are happening within key channels that really get us excited about what we're doing and the timing for building software for accommodating private investments. So over the years and projected forward, there are more and more assets moving into private investments from an institutional, intermediary, and individual standpoint. Overall, the world's biggest investors are routinely referencing their under allocation to the asset class. And privates as an asset class is broad. You've got private equity, venture, private credit, infrastructure, real estate, and others. So there's a lot of different types of investments sort of contemplated in these metrics here. But the overall picture is that the biggest groups are trying to find access to increasing their private exposure. At the same rate, folks in the intermediary channels, such as outsourced chief investment officers and registered investment advisors, have caught that trend. Their clients have also caught that bug and are demanding more access to privates, and that causes more pain points when it comes to how those investments are managed. Particularly for us, that leaves a digital software opportunity that we are pursuing. And in the same vein, the global millionaire count has risen steadily over the years. And with that has the appetite for those individuals to access through institutions and through intermediaries more private investments. And so for our team, we calculate an estimated 15 trillion of investable net worth that we see is going to be looking for more and more private investment opportunities over the years to come. Generally speaking, as I said, these markets are enormous and they cover lots of different asset class types. So the expected AUM for alternative managers is to be in the 20 trillion plus in come 2027, and the number of those deals represented by venture capital has steadily climbed. I highlight that asset class because it's probably one of the more sexy topics that you hear about, and that's with good reason, as the counts of activity have steadily climbed over the years. I want to highlight two major reasons why privates have grown so substantially over the last several years. First of all is simply performance. Private assets have generally tended to do better than their public market counterparts. So this chart really highlights two different asset classes. So public versus private equity and vintage timelines of performance of those respective investment types. And then also on the credit side, private credit versus public loan performance. Similarly, privates have outperformed. And so all of this has driven a broad interest in access for the world's, investors. Additionally, I always like to highlight the fact that privates as an investment type give you a unique opportunity to define who you are as an investor. And this is a way in which your investment activity can align with your values, your interest areas, your persona, and so on and so forth. It's in a way that creates a touch point to your portfolio that conventional investments don't necessarily do. But on top of that, as I said, they generally speaking, they perform better. And by adding them into a conventional portfolio, this is a way by which you can add returns on an expected basis to your portfolio, as well as reduce risk, because the timelines and the volatility of private investments are a very different profile than your stocks and bonds. So overall, those are kind of like the driving factors here. Within privates, we've set out to build the central aggregation and collaboration platform. If anyone's had familiarity with this space, you might know that private investments are inherently driven by content. The data is unstructured. The places in which you might find relevant information about the investment's performance, how it's tracking to goals, that they're often siloed. It's a jumble of different systems and sources. And we set out to make it easy to bring those things into one place to understand how you're doing and how your investments are performing. Overall, our platform really kind of breaks down into two key sets of functionality. We look at the world in investment management, which is where you're tracking a portfolio, your holdings, the metrics associated with those companies or funds, really anything that relates to what's in your portfolio. And then investor management, which serves a handful of use cases around engaging other parties who might be related to your investment activity, whether you're a fund manager, an independent sponsor, if you run an angel group or a syndicate. We have tooling that supports the dissemination of all types of investor relations type content. Breaking that down a little bit further, the kind of four key pillars of our investment management offering relate to portfolio monitoring, opportunity tracking, investment performance metrics, so your standard, how are we doing over time, charting tools, et cetera, and dynamic investment profiles, which for us serve as kind of these real-time living and breathing data rooms. At the same time, we have built out a handful of collaboration tooling that allows investors to share information about deal flow and portfolio performance with other investors in their network, whether that be an informal association with people that you like to co-invest with, or something more formal where you're perhaps a GP and you manage LP relationships, or you run, special purpose vehicles, SPVs as we call them, and you've got investor relationships to manage as a result of that. So for those types of use cases, we've got our syndicate investor breakdown, our fund composition tooling, our branded investor logins. So if you've got any use case for having a portal hosted on your website, this is a great tool set for that. All of it centers around very granular but easy to use file and content sharing with easy to grant permissioning to make sure that only the right people are seeing things that they ought to see within your investment universe. With that, I'm going to quickly jump into a little bit of a product run through. Give me 1 sec, and I'm going to switch my screen to our active product. just to give everyone a glimpse on this call, I'm in the Clockwork Universe platform. Upon entering our system, you're going to see an aggregate page of all your investment activity. So this is a fictional family office. It's modeled after a real use case that we have with one group. All of our activity can be customized and categorized however one likes to group their investment data. So in this case, we've set up a view based on traditional asset classes. So the family's got investments across real estate directs, private funds, private directs, public equities, real estate, and cash. And upon drilling into any one of those portfolios, you'll get a summary performance for the assets and transactions that comprise that collection of holdings. So if I toggle between, real estate, private funds, I'm in our private direct portfolio. I've got access to a handful of metrics up top. I can click in to see a more detailed time series of how investments are performing. I can play with the timing of that chart. I can switch my views. I can also aggregate company metrics if I track metrics across portfolio companies, so on and so forth. If I go back, I'll also be able to quickly drill into what I mentioned were our dynamic company profiles. So this represents a fund in which the family office is invested. I've got a private update feed of all the capital calls pertaining to that. Those capital calls flow directly into the investment transaction records. So if I go back into one of these, I'll be able to see at a detailed level each of our commitments and calls, and then I'll track performance down to when I get money out in terms of distributions. Every piece of information in the platform is granularly tracked. It can be shared via link. It can be shared on the platform through our share settings. You can add groups, lists, individuals, anyone who's privy to various pieces of information within your investment ecosystem. You can provide relevant access here. Additionally, one of the interesting things that we do that is unique in the landscape is that we provide a place to marry investment data. So think accounting, QuickBooks, wherever you might store your actual transaction records, from your balance sheet. We marry that with the actual content. So we've allowed for a team member or any collaborator to append legal docs and associated transaction records for the people who need them. So if I were to drag and drop files, I can quickly add any records, subscription documents, operating agreements, share purchases, so on and so forth, making this a true central point of truth for the investment office. Jumping back, as I said, there's a number of different things you can do in this platform. You can manage a whole host of collaborators. You can create and store lists. This provides limitless communication capability, as we have an in-app email builder, and all updates can be shared on the platform. So we see these tools in high use around performance reporting, tax document aggregation and sharing, and the likes. Additionally, within our investor relations suite, if it's a relevant use case, you can build emails, store updates, schedule updates with our calendar tool, and you can also manage third-party investor relationships. So if you've got a family office and you've got different folks who might be logging into a portal, you can control all of that access here through our handful of widgets. And you can always host your own branded portal through our login. Additionally, I'll mention that the app is all driven by an API. And so the API can be connected to other third-party systems, whether that's to pull in different types of information about your various holdings, whether that's other external third-party portals. It might be services that have cap table information, and it's certainly oriented around email communications. So every account is enabled with the functionality to tie one or many inboxes to the account, and those inboxes then feed updates directly into the app with a suggested update tool set. So you can catalog the information you're getting across all of your investments in one place and then make it easy to share those. As I also said, there are some tools built for finding new opportunities. So we have a bit of a discovery engine here. You're able to browse companies that are on our platform. These do not necessarily mean that company is actively raising, but if they are, we provide a means through which you can get in touch with that company. If you're a founder pitching your business and you want a profile, this is a nice place to manage content that you might permission to various investors. I'm happy to be in touch with anyone who finds this of interest, so please don't hesitate to reach out. As I mentioned, we have a deep metrics module, and I'll flip to a different group that shows metrics a little more granularly. One of the key aspects to the way that we engineered our software was to be multi-tenant and single instance. So the idea being that one can be part of many different groups. As you saw, I just flipped through a whole host of different client relationships that I'm involved with. Equally, if you manage or are involved with numerous investment offices, this is a place in which you can keep all that organized without having to manage a whole bunch of different logins and emails and passwords. So we're trying to make life easy for the investors and their collaborators. Again, if I go to metrics, I'll see the sandbox here. I'm going to go to all metrics, show you a quick glimpse of how we aggregate content and data across a portfolio of holdings. So these are different companies within this investor's portfolio. I've got operating metrics. I can also chart those if I'd like. I can even invite founders and other participants to collaborate on metrics reporting. So I can manage a whole host of invitations through this module here. Really popular is our file management system. And so we've built out a lot of interfaces to make it easy to find the things you might be looking for when it comes time to find those. So think tax documents, K1s, capital statements for funds, performance docs, and so on. Equally, investor updates. So these are a handful of investor updates shared directly to us by companies that are in the portfolio. And we've recently launched an in-app chat feature, which allows one to pin conversations to key pieces of information within the investment portfolio. As I said, this tool works for sponsors as well as it does for family offices and end asset owners. So in this case, I can quickly see in a given portfolio who's contributed that capital, and then I can actually manage an LP profile for my investors, and I can allow them to claim those profiles, receive updates, get information, stay in the loop, etc. I'm going to pause there for a sec. I see that there are a handful of questions within the chat, so I want to just toggle back to my demo account and quickly flip into some of those. Let me see. So is this directs only, or does it synchronize brokerage statements and et cetera? We actively built the platform to incorporate other types of investments. It's not just directs. We went to market with a focus on the pain points we know exist within directs and fund investments. But we've also recognized the need to have other types of information. So we have built out a systematic approach to connect different types of brokerage statements. We are not the place to do trading, to analyze every single transaction in one of those, but to pull end of period statement balances is a pretty simple setup, and it's something we're very accustomed to. So yes, in short. Thank you for setting this up. Let me see what else we have up here.
Yeah, Alex, I don't know if I saw another actual question, which I do want to remind the audience, if you have a question, you can go ahead and put it in our chat box or in the Q&A box, whatever suits you. I had a quick question though.
Yes.
So kind of at what point would you typically see a family office engaging in this kind of technology, or, you know, what size, that sort of thing? Where do you usually see this in that timeline?
A portfolio regardless of size of investment. So you don't need to think about your AUM as much as the number of holdings is what drives most of the complexity in our world. And so when you get past, 7 or 8 unique holdings and you're actively trying to grow that portfolio beyond that 7 or 8, the amount of information starts to be a headache. If those companies or holdings are all reporting simultaneously on a quarterly basis or more frequently than that, you've got different portals and cap table tools for each of those companies. At that point, we typically see this becomes a good point for one to consider moving off of, an internal Excel or just, managing it through your inbox, which is totally adequate in many instances. But if you want that next level of organization, and then you've got, an easy tool set to track this all more professionally, that's kind of the size we see. Our client base ranges anywhere from single digit millionaires to, we have some 9 and 10 figure clientele who leverage a whole host of more complex reporting and service offerings that we layer on top of the platform-based use case. So we've taken intentionally a broad approach to market because we found that the market needs that. In fact, a lot of the investment platforms out there are oriented either to really big budget, kind of institutional size clients, or they overweight focus on public liquid market holdings. And so for all of the investors who've turned a hobby of angel investing or something like that into a robust portfolio, we actually see that leads to a gap in the market. That's really what we're building the product to solve for.
Yeah, and that was kind of the next question. Sorry, I had a quick follow-up. So then what do you see as kind of the advantage of using your platform over maybe something else that's out there?
Time to be live. We focus heavily on a handheld approach to onboarding. Our system has been designed to aggregate investment content quickly. And we did that, one, so that it's easy for someone managing this themselves. But secondly, when you log in and you see all your investment activity in this way compared to other alternatives you might be familiar with, it's a really wowing moment. So we've made it really easy to get to that moment quickly. So I'll say time, which saves money at the end of the day. Our solution is priced very competitive to comparable multi-asset class tracking software. Generally speaking, those platforms, when you have privates, they typically run in the 80 to 100K per year starting price. We like to be an order of magnitude below that. And we've built out some self-serve SaaS offerings that are even, allow for one to start with a, few $1,000s cost on an annualized basis. So the market is overpriced in many ways, and it doesn't orient to the private investor or private investment. It's much more focused on liquid market holdings. So those are our two main differentiators. The last one is that marrying of transaction data with content. That sounds techie or in the weeds, but it's a big factor of how private investments work. A lot of the data ultimately lives in PDFs and investor updates, and having those in the same place where you're actually tracking performance and valuation marks is really important to be able to stay on top of your portfolio. So any other questions, Shane or anyone else? I can just quickly flip through the rest if not.
Yeah. Go ahead and finish up for sure. I don't see any other questions at this point. Again, if anybody in the audience does have any further questions, please go ahead and ask them in the chat box.
So to date, we've got a growing number of clients. We've started to hit a stride and it's growing pretty fast. Interestingly, while the 85 clients may seem small in one sense for a SaaS product, it represents 2,000 related or sponsored investor accounts. As I said, a common use case for the tool set is that you come on the platform as a paying client, and you're doing that with the aim of inviting lots of other folks around you who are either interested in your deal flow or in a deal that you help manage for them, or if you're a fund manager, our tooling allows for you to manage relationships. So our reach is broad. We have a consistently growing amount of transactions and total updates. The platform itself is sticky, and in current representation, there's about 5 billion in AUM. For us, that AUM is assets under monitoring. In some cases, we have a more engaged relationship with some forms of non-discretionary management and other investor solutions that we provide. But overall, we've had a tremendous uptick in activity, and it's because the platform fills a unique void, and it's a very sticky use case once you start using this tool set. I mentioned that we have a set of ancillary offerings. So just to highlight a few of those, we do a lot, and this is a way in which we allow for the platform itself to be right-sized for a particular size or use case or complexity of an office. We have intentionally made the entry point pricing to be highly accessible. We work with people. We provide quite a unique level of customer and client support. I think in the modern tech world, most tools make it really hard to find an actual person's email address or get on a call with someone. We're much more hands-on and engaged with our client base. So Here's is a host of the things we do, and we've got a growing global presence between our offices and our, the client spread. That's the presentation. I've got a handful of other appendix slides just oriented around things that the app enables you to do easily. So generally speaking, we talked about keeping tabs on your portfolio. That's from pipeline management, doc organization, performance measurement, and reporting. So our aim is to be relevant for the entire investment lifecycle. We're not a diligence tool alone, where we help the diligence processes. We bring everything into the same place that you're then doing reporting at the end of the day, and hopefully collecting checks to reinvest. Pipeline management, we have a handful of tools built to support that. We're not a CRM, but we play nice with those kind of solutions. We recognize how they fit into the investment operation, and so we make it easy to integrate those processes and that content into one's account. Performance metric across a whole host of different types of investment activity. This is not for venture or directs alone, as I mentioned. Reporting, cash flow planning, some of the value add offerings that we layer on top if they're desired, and then our investment network. So as I mentioned, we do see a lot of deal flow from the portfolio of portfolios, and we allow our tooling to be used to sponsor deals and to collaborate around those. The last question I see there, talk about existing search and analytics capabilities and any plans to incorporate AI. So we've, one of the things we're launching in the summer is a global search function. So within the app, any update, company, investor, or other tag that you might use to organize content, we've enabled a quick 1 or 2 word search that will retrieve any and all of the related results that pertain to your updates or your portfolio. So we've got that coming out in short order. And we've already been playing with an AI assistant driven within our chat bot. So we have a chat capability that allows one to communicate with other folks on the platform. That is not really like a messenger tool. It's more about, collaborating around key pieces of information that relate to a deal you're looking at or an update you receive in, about the portfolio. But we've also incorporated our persona Celeste AI, which is going to be accessible to users to access global search, get quick access to metrics, calculations that you might be accessing, all native to the platform. So we leverage some of the outside third-party tools, but we bring those in-house and we follow all best practices. We recognize first and foremost that investment data is highly sensitive. So sending them through a chat GPT module or something like that is generally speaking, something we avoid, but we do allow the user base to do that if it's helpful to them. So our AI release is probably a little ways off. We've got that in beta. I'd be happy to demo that as part of a broader demo, but it's on our radar. As everyone knows, AI is shaking up the world in general. And so if you're not planning to incorporate that in some form, you're likely to be left behind. So we've taken the steps to build our AI persona into the platform alongside our some nascent machine learning tools. I highlighted suggested updates as one of those, but happy to expand on that. I can share my email address. We've got the info@clockwork.app if you want to contact us there. Shane and David and Hall have my contact info. They are welcome to give it out. So David, I'd be happy to connect with you whenever you'd like, and anyone else for that matter.
Yeah, and for everybody in the audience, we will be sending out the recording and all of the information you saw today. So please, if you need anything else on that front, email us back and we'll get it for you. But thank you, Alex. That was an amazing presentation. Very interesting. I'm going to run a quick poll just for those of you in the audience who do want to follow up directly. And you guys can just go ahead and answer that now.
And Shane, thank you
Yep.
for giving me the opportunity to present. It's a pleasure. I know when we do this, we cover a lot of ground that is, surface level, we'll say, and there's a lot below the surface with these demos. So I recognize that that's a bit of, drinking from the faucet here when I go through soup to nuts what we're doing and why it's timely. So happy to do follow-ups, and thank you again to 10 Capital for putting this on.
Sure, yeah, and we're glad to have you, and would welcome to have you back as well. So thanks again, Alex. At this point, I am going to have our first presenter on the company side come up, and that's going to be the team from Alithia Power. Alex, if you want to stick around and ask some questions after, that would be awesome. Go ahead and get my timer ready. Y'all are going to have your 15 minutes, so give me 1 second. Yeah, and also everybody in the audience, if you're interested in either of these companies that you're about to see, we're going to run polls for those as well. You can also ask your questions in the chat box for those as well. So with that, I'm going to let the team at Alithia take it away.
Thanks, Shane. Thanks for coming and visiting with us this afternoon. I'm Jeremy Jones. I'm co-founder and chief commercial officer for Alithia Power. Alithia is a startup based in North Carolina that is designing the next generation of power chips to accelerate the pace of electrification. So let's start with what a power chip is. Power chip can be seen on the left-hand side in the little finger. Those are devices that control thousands of volts of electricity and hundreds of amps. And they're used in critical applications like solar, wind, Teslas, and satellites, any place that needs a capability of handling high power device, high power. The problem is most of the devices out there today are based on silicon, and those are slow, they're inefficient, and they're bulky, they're big. They have to be big to handle those kinds of voltages. And there's a newcomer on the block now called silicon carbide. You may have heard that for things like the Tesla, coming from companies like Wolfspeed. They're better than silicon, but they lose performance at high voltages and powers. And right now, the US has got a huge problem around electrification. We generate about 400 billion worth of power annually, and about 40 billion of that is thrown away in the form of heat. And that's because of the devices that are used to control it. And we have the solution to that. And the solution is this thing called Vertigan, our brand for our vertical architecture, GaN-based power electronic devices. That's a big mouthful. But what it is, it combines breakthrough manufacturing, exceptional materials, and enabling and proprietary device designs to really blow silicon and silicon carbide out of the water in these high voltage applications. See, I'm not going to go through the numbers, but you can see for efficiency, size reduction, switching speed, all of those are not just, percentage points above, they're orders of magnitude above what these two materials can do. At the same time, we're reducing the cost of these devices. So you get a performance pop, a major performance pop, and a major cost reduction. So good on both sides. So our target market is really high voltage, high power. Now you can see down in the bottom left, there are things like legacy silicon, lateral GaN. These are used in things like your phone charger, your laptop charger. As you move up in voltages to 400 and 800 volts to things like Teslas and other EVs. Now you're getting into GaN, silicon carbide. Those are very, very competitive markets, but it's really in the high voltage above 1700 volts and up in the megawatts of power that we really shine, and that our value really comes through for things like long haul e-trucks, for trains, for hauling, big mining trucks, for fast chargers, for the new generation of electric aviation, for wind, and for power transmission. Silicon carbide and silicon just can't play there. They just can't get the job done, and our vertical GaN can. So if you look at two of our entry markets, the first is e-trucks. There's increasing government mandates for switching to e-trucks, away from diesel, away from gasoline, get it into battery trucks or hydrogen-powered trucks, which work through fuel cells. They've got major issues with range and recharge time. So you can imagine a truck that only goes 200 miles before it needs a 2-hour recharge. It's a huge loss to the industry, it's a huge loss to the owner, and it's a huge loss to the driver. And it's really going to plug up the infrastructure of the country. With Vertigan, we can get the range much better than 30%, the recharge time down by 50%, and really put a knock on that loss and really enable the next generation of trucks. Solid state circuit breakers is growing mandates for building efficiency, smart buildings, where the power is monitored and managed within the building. It requires very high efficiency, very high voltage circuit, very high performance circuit breakers that have very low electrical losses. You don't want all the power going into the building to be consumed in these devices. And if there's an interruption, if there's a problem, they trip very quickly. And we have strong interest from our industry leader in that regard. And you can see down the bottom that people aren't seeing this as sort of a me too or sort of a little next step. They're seeing it as game changing. And they're seeing double-digit savings from these devices. So it's a real solid pull for the customers that we're dealing with now. One of the key factors in our key business model is doing it fabless or fab light. And you can see sort of the value chain, the process chain above, where you start with a wafer, you put these high performance layers on it, then you turn it into a chip. Well, we're controlling the center portion of that. These are the key manufacturing and materials advances that we bring. And we have key partners that we're working with on those. They're willing to license or allow us to acquire that. So as we start moving up into higher and higher volumes, we can take those key processes, bring them in-house or license them to a high volume manufacturer and really control our destiny with that, without having to put hundreds of millions of dollars of iron in the ground to form a factory. The team, very, very strong. It's hugely strong. And I know you hear that about a lot of businesses, they have the ultimate team. But we've got over 140 years of building compound semiconductor businesses. We know the markets, we know the target customers. We don't just know them, we deal with them. We have agreements with them. We know the materials and manufacturing processes, how to turn these ideas, how to turn these processing into devices. We know how to form partnerships and JDAs, not just in the US, but globally, in the EU and in Asia. And we're experienced, having done this before in startups. We know startup financing and exits. And we know how to control capital costs. We know how to take care of investment dollars. So our first step is to show this device, this so-called PN diode. And this is a diode, a device that allows electricity to go one way and not the other through it. It's a very simple device, but it shows, and it will show, all the key characteristics of what we're bringing to market in our more advanced devices. So this is a one-year project we're doing, a one-year program, about $750,000, and it will show most of the, if not all of the things that we need to move forward into commercialization. It will also allow us to form our IP base and bring that to filing status. For intellectual property, we've completed an FTO and patentability report. Our IP is going to be a combination of know-how, trade secrets, and licensed patents and filed patents. We've negotiated an exclusive license for 4 foundational patents, and we have 7 patent filings planned post-closing. 3 for the design of the chip, 2 for the process of how do you make the chip and the materials that go into it, and 2 for the system, how this would go into someone else's system and perform. And the reason we have not filed those yet, we want more data, we want them to be strong, and we don't want to disclose too early. So why Alethea? We've got a first mover advantage. We've got technical partnerships with key suppliers. These are unique suppliers that can move quickly. Our designs are patentable and manufacturable. They're high performance. We have demonstrated the key processes and materials that will go into these devices. Now, our primary competitors, another couple of startups, failed in late 2023. They had a strategy of building their own manufacturing tools, putting those fixed costs in place. They also chose designs and materials that resulted in low yield and high cost devices. We're solving all of those issues with our strategy. For financing, we're out now raising a $750,000 seed round to complete and sample proof of concept devices. This is following closing of a $350,000 pre-seed, which we did a lot of the foundational work around getting all the supply chains in place, getting the IP settled, and getting Alethea up and running, and getting customer contacts going. It's a convertible note. 6% interest and a $5 million valuation cap. We're perceiving a follow-on in 2025 to complete and sample the minimal viable products and get those into our customers' hands. And a Series A in late 2026 to acquire some of those key processes that you saw and bring those in-house or to license those to a high volume manufacturer and ramp shipments. And we see strong potential for 2025 for non-dilutive funding from DOE, DOD, and also potentially from the CHIPS Act. So I'll leave you with this slide. What are some potential exits? We likely will see acquisition by a large chip OEM after the Series A. After we've demonstrated all of the key characteristics, we've started shipping these devices to customers. We've gotten feedback that these are what we say they are. And you can see some recent comparables from what's been a very, very active M&A market around these kinds of technologies. So with that, I will leave it there and I will ask for your questions. Thank you for listening.
Yeah, thank you, Jeremy and Chris. Alex, did you want to come back up here and ask the first couple questions?
Sure, happy to. Do you guys already have, I'll just ask a couple and you can answer them how you like. So one question relates to any sort of LOIs or early indications of customer, contracts, et cetera, and even like a sense of scale for those. Secondly, would be around future fundraising. It seems as though this could become it's a semi-capital intensive business, and you referenced numerous follow-on rounds already kind of on the radar. It'd be helpful to just get a sense of scale of those, anticipated round sizes and such, just to know, like someone coming in the 750 round, what kind of, capital ramp up is anticipated here. Maybe I'll start with those handful and then I can add more if we need.
I'll answer the second question first. We see it's probably going to be around a $2 million round in 2025. That would be the follow-on to really get this thing to full prove out, full transistor demonstration, and to get these things at the customer's hands. The Series A we see in 2026 is about a $10 million raise, and that's to get some key tools and key CapEx in our hands or in our suppliers' hands to start generating, not just the thousands, but the tens of thousands, the 100,000. So we're not talking about a $50 million raise here. It's something around the order of 10 million. The first question again was?
First question was around letters of intent, kind of like early indicators of commercial viability.
Yeah. As I said on that customer slide, we've had contact with OEMs of large e-trucks that have got things out there now. We have had conversations with their tier 1 suppliers that make the guts of those e-trucks. And these are either the number 1 in their groups or the number 2 in their groups. And same with solid state circuit breakers. We are dealing with the number 1. In each of those cases, those folks want to do funded JDAs. So these would be joint development agreements where we're making custom chip designs for their specific applications. And they're on board to do that as soon as we get finance, as soon as we're something, and we're moving forward. So they're open to that. We've had, we know how to reduce that to paper.
Jeremy, do you want to comment about the opportunity for the prepaids that we're working on for the diodes?
No, go ahead, please.
Yeah, we recently had a customer, the products we're making are not available, right, from other places. So we've had 2 customers offer to do prepaid NREs to help us develop it. And we're pursuing that opportunity, not there yet, but these are on the order of about $1 million in total prepaids. And then last thing, Alex, about the letter of intent, both customers have said they'll write one if an investor or a series of investors are looking for it. Right, they're very aggressive with the idea of a JDA and then helping us bring this to market.
2 follow-ups are: do you perceive this as more of like an IP licensing business model versus full build and supplying of the actual products that you're designing? And then with respect to the 750, do you have, some of that already committed, funded? What stage are you in with that raise itself?
Oh, can I answer that, Chris?
Please.
Right now, that second question, what are we expressions of interest? We have got expressions of interest from folks from the industry. There is a former CEO of one of the largest foundries in the world has expressed interest and has got a group together. We think that they're probably on the hook for probably $500,000, which we should know in the next couple of weeks. So it's, I think it's great validation that number one, they've been in that business, they see the value here, and number two, they're willing to put their money up for it. Second question was, I'm sorry.
More business model oriented, just to follow on the sort of path to commercialization. Is it going to be more like selling end product into the supply chain, or do you think it's a licensing model and therefore the IP play is
I think our focus right now is on making things and selling things. Making devices and selling them. Now, as this thing grows, as I think the real challenge is going to be, I think the real exit is going to be, we're going to get acquired by folks that know how to move to the 50 million or 100 million. Now we've got a plan on how to do that, but we think that that's probably where it's going to go. Because they don't want to, it's fine to buy IP. It's much better to buy, something that's working and going and has a pipeline attached to it.
Great. That's going to bring us to the end of our presentation, guys. Thanks so much, Jeremy and Chris and Alex, for your awesome questions. Next, I want to go ahead and bring up the team from Solution Medical, second company presenting today. And same thing, whenever you guys are ready, you can go ahead and get started. Let me just bring my timer back up. Whenever you're ready.
Great. Thanks, Shane. And now for something completely different. Good afternoon. It's an honor to be with you today. I'm Todd Wallach, CEO of Solution Medical. As a quick introduction to me, I'm a life sciences executive and entrepreneur, and have had taken drugs from the earliest signal in the lab to multiple drugs on the market globally. And I've had multiple drug company exits with greater than 10 times return. Solution Medical is a specialty pharmaceutical company focusing on drugs requiring mixing and preparation at the point of care. We're launching our first easy-to-use therapeutic product for adrenal crisis in 2026, representing an EpiPen-like market need targeting 145 million in product sales. Our proprietary drug and device delivery platform offers expanded revenue opportunities via our drug pipeline, as well as external partnerships. We're currently raising our $5 million Series A, which is being led by the Keiretsu Forum and syndicated with Band of Angels, Golden Seeds, and now with the 10 Capital Network to advance our adrenal crisis treatment to commercial readiness. I know Hall Martin is not on the call today, but we appreciate his efforts as he was part of the due diligence team that did a very deep dive into our company and has produced a very strong due diligence report. Additionally, we're currently engaged in multiple exit and partnering discussions and offer multiple investor return scenarios over the next 2 to 3 years. Solution was founded by adrenal crisis patients for patients. I'm joined today by Julia Anthony, our founder, where she and her family members are patients who experience multiple crisis events per year, which requires emergency care for immediate administration of cortisol, the stress hormone. There are 200,000 patients in the US, just like Julia, who are under constant threat of an adrenal crisis occurring. It is a life-threatening condition that's triggered from the body's inability to produce the stress hormone cortisol. Immediate treatment is required for better outcomes, and if immediate treatment is not given correctly or delayed, results in potential long and costly hospital stays and potential death. But what these patients have is a significant pent-up demand for an easy-to-use product analogous to the EpiPen. Adrenal crisis patients carry 2 to 4 doses with them at all times in their at school, home, car, work, office, backpack, etc. And current products are based on vials and ampules, which require breaking glass containers, technologies from the 50s and 60s that are difficult to use. In the event of a crisis, patients under a significant state of mental and physical impairment And if this chart looks complicated to you, imagine looking at this and saying, I have to administer my medicines as I'm about to pass out, shaking or lying on the floor, and it requires 14 cumbersome steps. We have developed 2 easy-to-use combination products to address this crisis. First, our 3-step pre-filled syringe, which we'll bring to the market in 2026, and our twist-jack device, which we'll bring to a market in 2027-28. These injectors carry the drug on board and reconstitute the drug in emergencies, which preserve shelf life, availability, simplifying drug administration, and ensuring patients get their drug timely. Our combination drug and device products replicate and deliver the existing drug formulation and will be brought to market by the abbreviated FDA 505(b)(2) NDA pathway, which requires minimal clinical trials. We have built our end-to-end supply chain via our partners, which is ready to finalize the production of these products and ramp up for launch. Our superpower is into customer discovery and collaboration with over 1,900 patients, multiple clinicians, and over 18 patient advocacy groups, which has informed our device design, reimbursement, and commercial models. We've created significant market pull at launch by these patients and advocacy groups who are all ready to endorse and purchase our products at launch. We project over $145 million in U.S. sales of our pre-filled syringe and twist-jack products. This is based upon our extensive commercial reimbursement and pricing studies, as well as historical product sales by channels. We expect full patient access with no prior authorization or no step-through therapy for patients to purchase. They will typically have their common copay. We will continue to grow by initial market pull and then leverage our sales force for initial market push into expanding our channels in both retail and institution markets. Finally, our future pipeline and collaborations bring additional revenue streams thereafter in the 28 and 29 timeframe. We are launching our pre-filled syringe in 2026, shortly thereafter followed by the twist-jack. Our next key milestone is GMP manufacturing readiness for our pre-filled syringe, of which we're raising money for and targeting completion in 2025. This milestone is critical as it builds our product to manufacturing, clinical, and commercial readiness and moves and rapidly advances to launch. Additionally, this milestone opens our target exit window. We are already in extensive discussions with over 10 companies. We plan on raising our Series B to ramp our products to launch, build our initial batches, and our sales force thereafter. Given our launch in 2026, we expect to be cash flow positive and break even within the first 1 to 2 years of sales, with 85% product gross margins and growing to $145 million. We've allocated a strong percentage of sales to grow our sales force and grow our business. After commercialization of our adrenal crisis products, our pipeline currently includes other hormone replacement treatments, of which we're targeting for 2028. Additionally, our platform can be leveraged in multiple markets with value in excess of $200 billion. Our main competition is the standard of care, vials and ampules. For our pre-filled syringe and auto-injector for use with other platforms, our competitive advantage is about being able to give an end-to-end solution. Finally, our platform and drugs are protected by a broad IP portfolio in 9 countries, which currently consists of 6 now as of last week, patent families for design, methods, and utility for our platforms, and are all owned directly by Solution, and we also have 4 current trademarks ready for launch. Our management and extended external team bring extensive drug and device experience from small to large pharma and have launched over 200 products. I have had over 7 products in the market myself. We have bolstered our team with experts in drug formulation, engineering, regulatory from Chimenox, as well as reimbursement pricing and commercialization from Micra. We have raised a total of $1.5 million in convertible notes to date, and our Series A is our first price equity round. Current investors are expected to participate in the round, and all outstanding notes currently will convert into Series A. The raise is going to achieve the GMP manufacturing readiness milestone, which, as we indicated, is ready to begin our final push to launch. Our Series A is being led by the Keiretsu Forum, Mid-Atlantic, Southeast, and Texas, and due diligence has been completed by Band of Angels, Keiretsu, Golden Seeds, and 10 Capital Network. And they're all planning on participating in the round, including the majority of the due diligence team. The Series A is for $5 million and represents attractive terms for new investors, including warrant coverage, participating preferred, and 2 board seats. Finally, our exit window is open, and we expect to have further traction upon completion of our Series A milestone. Potential exit collaborators and potential exit and collaborations are with drug companies, combination drug and device companies, as well as device companies alone. Some of our competitors in our previous competitive chart, and we're already in discussions with 10 companies. Valuations in this space are typically around 5 to 7 times revenues based on market and my direct experience. And a company with a liquid injector technology exited in 2022 for over $1 billion. Finally, Solution Medical is committed to bringing the best drugs to market to as many patients as possible, as soon as possible, and as easy as possible. Thank you for your time. I look forward to further interactions and sharing questions and answers. And during this period, Julie Anthony, our founder, will be joining us. Thank you.
Awesome. Yeah. Thank you so much, Todd. And Julie, once you come up here, thank you as well. Alex, do you want to go and get us started with some questions?
Yes, happy to. Well, so one of the first things on my mind, just with respect to the trial timelines and such, can you elaborate as to where within the phases of clinical trials you currently are, and how the Series A kind of like maps to the various trials that you need to go through, even on the accelerated pathway?
Thanks, Alex. So what's really interesting about this is when people are typically hearing drug companies in drug development, they're used to hearing exactly what you said. An NDA, a new drug application with a phase 1, a phase 2, and a phase 3. That is what's technically called in the FDA speak 505(b)(1). What we're doing is taking older drugs, formulating them exactly the same as that they've been approved, and has a long history of phase 1, phase 2s, and phase 3s. What we'll be doing is leveraging very small scientific bridge, basically in about 20 patients to bring to market, where we basically inject the existing drug in healthy patients and verify that the drug is actually administered. Then we give our drug and we compare and make sure that the drug is in the bloodstream and they are equivalent. So it's a very, very simple clinical trial that doesn't require the $10 million phase 1, the $20 million phase 2, the $50 million phase 3 that we all hear about. This will come to market and launch in 2026 off the simple data package.
So that is to say that the requisite trial you need is planned to be completed with meaningful results be in 2025?
In 2025, I'd say mid to late 2025.
Have you identified a sponsor or a partner for that already?
Yes, and we have it budgeted in, and we may be able to do it under our $5 million raise. It is a phase 1 unit in Arizona that they will have to recruit 20 healthy individuals, and that would be it. And it takes about, I'd say, 30 to 60 days to do the trial itself. And I should supplement, we've written the protocols with our partner, as well as had FDA concurrence with our strategy and what we're doing.
Got it.
It's a much simpler path than we're all used to, and that's the excitement of this. There's about 1,800 different drugs in the market that require reconstitution. In other words, the powder and the liquid. And we can attack every one of those 1,800 one by one as we move forward with this regulatory pathway, and then leverage in parallel these devices for external partners that they can do their drugs in them directly. So the revenue path is both our pipeline and with others, and they will go the regulatory path.
Is there no regulatory consideration on the device side? That's more of confirming that you're not doing like a 510(k) with the device itself. It's all
with the drug. And when you have the first one, you get the package, then you move one by one by one. So it's not a 510(k). And the advantages of what we bring is typically injector companies are either injector companies or they're drug companies, and very
Right.
rarely do you get an expertise in both. And that's where we're focused on, controlling the drug and controlling the device for the best user experience.
So Alex, we're a drug-led combination product. The primary mechanism of action, or PMOA, is drug, not
Yeah.
device.
Understood. Okay, and so that limits any kind of regulatory timelines on a device side. It's all
Exactly.
get the drug approved and you're good to go.
Exactly.
Hopefully.
Exactly.
Okay, yeah, Shane, I don't have any other questions at the moment. I'd have to this is very insightful, and you guys mentioned what was available still based off of the 5 million and the current investor appetite.
So we've just finished due diligence on the term sheet. So we have about soft circles for about 750K right now and heading to our first close. So there is several $1 million available in the round that's open. In fact, the due diligence report was completed about 2 weeks ago, and our first coming out party is this, as well as the ACA meeting last week.
Great. Well, congrats on the momentum.
Thank you. We're excited, and we appreciate Hall for being part of this.
Great. Well, thank you guys for your presentation. I want to thank one more time all of our presenters. So Alex from Clockwork, the teams at Alithia and at Solution Medical, y'all made for a great event today. So also thank you for our audience for taking the time to come out and listen to everything. We really appreciate y'all. We will be sending out the recording as well as more information on each of our presenters today. So look for that in your emails tomorrow, and we'll see you at the next one.
Great. Thank you all. Well done.
Thank
Bye,
you all.
everybody.